Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see you all. All right, so let's get to it. Happy Tuesday, everyone. And let me get on over to the questions and comments. Just a quick heads up. We have plenty of Fed speak coming our way this week. Just when we thought the Fed was in the rearview mirror, not so much. If you take a look at the calendar over at Forex Factory, it's just a handy dandy calendar that includes not just data points for the US, but globally, and then many of the central bank events. And again, not just the US and the FOMC, but ECB, BOE, etc. And if you scroll on down, 2 p.m., he's back. We've got Powell at 2 p.m. for some testimony. Here's what's cool. Frankly, I right now don't know if the market wants to be in that mode that it used to be in for much of the year, where there's usually a ramp up in front of Powell because people don't want to be caught short in front of an event like that. But since there was a little messaging tweak last Wednesday, we might now see that the market might want to be surprised, right? They're waiting for something a little less hawkish or more dovish than the tone that they got Wednesday. And so they might flatten out. They might even, get a little preemptively short in front of those events. We'll find out how the market wants to respond. And then we can see if there's a new rhythm, a new pattern that emerges. So just be cautious. Now, for me, as far as I'm concerned, I've got my 9:30 to 11:30 window. I'll do my day trading in there. And then on a day like today, as we're all just sort of collectively waiting to see what Powell does to the market, I might decide to get it flat. I don't want any surprises. And I just assume take what I can in the morning and then just take the stance of let's see what kind of pattern the pre and post Powell events will have since Wednesday. All right. So with that being said, let's take some questions. Again, take a look at that calendar. Make sure you're aware of what's coming at you. And let's see what we have going on. All right. So first question is, hey there, Dominic. Happy coffee. Yes, always. Any thoughts on STLD? No different than yesterday when we discussed it in Charts and Coffee, quite frankly. And even in the room. So Dominic, let me just stay consistent with the messaging here. And I think that's really, really important when we're taking a look at it. Daily timeframes as opposed to intraday. My opinion seldom is going to shift and do a 180. It's always going to be, slight degrees. I bring up SLX, Dominic, because this is the steel ETF where STLD is heavily weighted. And so I don't have a problem being long some of these names. It's really a matter of, let me take on over to STLD. What it's really a matter of is whether or not, I'm going to go on over to the SLX. Here we go. So what it's really going to be is a matter of whether or not it is the relative outperformer within this group, within this tide. And most of my interest, I think STLD really still ranks number 3. I like VALE better. And I think CLF, especially since it can go all meme stock again, is probably somewhat tempting, especially after the pullback. We get another ramp up from the Wall Street Bets crowd. Then CLF could have another push higher. Now would be a good time to think about that after the pullback, not after it takes off. And so VALE, CLF, and STLD. That would be in order, that would be what I would consider to be relative outperforming potential bullish plays within the SLX tide. Thanks so much for the question. Moving on to what are my thoughts on Bitcoin? Look, Bitcoin is a funny thing. When you look at FinTwit, which is financial Twitter, you've got a group of people, the hodlers. I've got my diamond hand shirt on today. You got a group of the hodlers, and they are maniacs. They are verbally violent to anybody who dares talk down the DeFi crypto world. it's gone a little bonkers. When I first got involved in crypto in 2016, it was fringe. And then every year since, the fan base and the intensity of that fan base has borderline become fanatical. And I can understand they're very passionate. I'm not, but anytime you've got a fanatical type market, it gets very tricky. This market was rocked because Elon Musk had some comments about Bitcoin and the environment and the mining, and because China had really clamped down on miners. This is a fragile market. I don't mind Bitcoin one bit. I have Bitcoin. I'm still, I'm I guess you can kind of say I'm a hodler, right? I don't have a problem with being, and I'm not sure. I usually pull up Bitcoin on what do you call it, TradingView. But the truth of the matter is, I really don't have an opinion here. And the reason I say that is, if you believe in Bitcoin, then these lower lows are opportunities to get long. I'm going to say this straight up because you guys know that's the way I do it. Anybody who bought above 60 is just a moron. There's just no tactical reason to buy at new highs. And now, if they loved it at 60, they better darn well love it at 30. So yeah, I know, I'm sure I ticked off all sorts of people, but someone needs to say, quit buying stuff at brand new highs. There's always going to be even a slight pullback. And even on the way to 60, we used to get pullbacks of $7,000, $12,000, $15,000 on the path higher. Embrace the pullbacks. That is going to be your superpower. And if this is a real trend, the pullbacks are going to be bought. So if you're a believer in Bitcoin, the move lower is absolutely a wonderful opportunity. The lower, the better, right? The lower, the better. And so in that regard, without completely alienating a group of people, be very careful wandering into this market. Just be very careful. You've got to take a very long-term horizon. I've got about 2 or 3 books on the shelf behind me that allowed me to just accept what the narrative around Bitcoin is. It's a DeFi narrative. It's a longer-term time horizon narrative. It's a bet against the US dollar as a narrative. And that's not going to happen overnight. Speculative-wise, if you like to speculate on Bitcoin and trade it, there's a brand new micro contract from the Chicago Mercantile Exchange. Trade the futures on Bitcoin. So I think my advice is this. Are you a hodler? I am. My narrative for Bitcoin is decade plus. When I bought it in 2016, I thought, am I going to still hold this in 2030? Probably. And if I didn't want to do that, I shouldn't have bought it. That was my approach. If I want to speculate on it now, then I'll trade the micro contract from the CME, and I could take a very short-term, few days to few weeks type approach. So think about how you want to trade Bitcoin. And the truth of the matter is, my thoughts on that those are my thoughts. You've got to ask yourself how you want to engage it, what your time horizon is, and whether you believe in the narrative or not, right? We saw a lot of the folks who just kind of got in speculatively get shaken out. And that's what happens to those folks. Maybe they'll learn, maybe they won't. But I think that now you're probably coming back to the core. One thing I'll add tactically, because everything I just said was my opinion, right? My approach, my philosophy. I believe Michael Saylor's position is a break even at 26K. I don't know if that's true, but I have read that in a number of places that his position is 26K. That could be a really interesting level in terms of what could be defended. So keep that in mind. All right. So, and gang, all I can do is share my opinion, which comes from experience. I know when my family members were suddenly calling me, asking me, should I buy Bitcoin? I'm like, oh, we're going to pull back, and we're going to pull back hard. Study up on what Bitcoin is. It's a fascinating thing. There's some really great books. There's some really great free resources. Study up on it. It's going to help you make some better decisions. Do banks benefit from a hawkish Fed policy shift? Well, the idea of whether or not they did doesn't pan out on the chart, right? Remember that XLF is heavily weighted within the S&P. So if the S&P washes out, it's going to drag the XLF with it. The I'd say 2.5% to 3% is where financials start to do a little bit better. But you got to remember right now, the tick of 25 basis points, I think 2023 is factoring in maybe 50 basis points. So that would be 225 basis point hikes. I don't think that makes any difference to the financials. They're able to lend money out at very, very low cost. That's why they've been moving higher. Not to mention we saw some serious sector rotation probably Q3 of last year. But you'll notice XLF went out with the tide with everybody else. I don't think if we're talking incrementally from where we are now, which is basically 0 to 25 basis points, that's going to be a huge needle mover for the financials. So financials are probably still going to ebb and flow with near term, about 5.5, 4 weeks into earnings, and longer term, what is the S&P going to do? So again, I think, if people talk about rate hikes and how do certain sectors do within a rate hike environment, that's sort of the first layer of the conversation. Below that is, we're talking going to what? Maybe 25, 50 bips. I don't think that's going to be a needle mover at all. So we'll see how they did with this next, with the earnings coming up, and we'll see what the next leg is, but keep an eye on the S&P. And by the way, as long as we're talking about XLF, let's talk about KRE as well. KRE regional banks, that's a little bit more tied to, say, the Russell, but it had been a narrative that had been holding pretty well, as was financials. Financials was a terrific trend. So I'm not going to get mad at financials for that break. In fact, what we can do is just jump on over to the weekly chart for a moment and really take stock of where we are. 21 exponential on the weekly. If I've got a longer term time horizon as well, which I do, I have a book of trades that are short term, days to weeks. I have a book of trades that are 6 months plus. I shouldn't call them trades, more of my investing portfolio. I've already added XLF to it. But again, it's minimum 6 months to prove itself. And then after that, because I bought the underlying, and that's something that we probably should talk about a lot more. When I talk about certain types of trends and pullbacks, yes, we talk about futures and options and the ETFs and stocks, but there are times I buy the underlying as well. When we're buying derivatives of the underlying is going to be a valid, that stock, that ETF, that underlying is going to be oftentimes valid too. So I straight up bought XLF on last week's move, but not with a, say, few days to few weeks time horizon, 6 months minimum. So that went into my longer term book. And by the way, just to give you an idea of what I mean by that, take a look at the weekly on XLK. This is what I mean about paying attention to trends on multiple time frames, which allows you to manage multiple time horizons. And we just sort of did a deep dive into the time horizons on Bitcoin. My time horizon on Bitcoin is measured by a decade minimum. 2016, I plunked down that money and said, I'm going to forget I have it for 10 years. And so some of those longer term time horizons are going to serve you really, really well. And separating your different books of trade, separating your day trading from your swing trading to your investments, or if you want to call it position trading. I don't get hung up on the verbiage, but the time horizon is really important. Okay, so thank you for that question. Next up is, we've got Russell rebalancing. Yes, just when we think, this is one of the more dramatic rebalancings. This is probably the most volume and volatility potential in terms of rebalancing. And, the weekly, let's go back to that weekly for a moment. That might be a good place to look. The Russell has been lagging the markets in general. Even when the NASDAQ started trending, when the Dow was trending with the reflation uptrend, the S&P was moving higher on energies and financials and healthcare. The Russell's just been a hot mess. It's just been a distribution chop since arguably March, but most definitely since beginning of March to say middle to end of March, this market broke the previous uptrend and has been in a distribution chop, this yellow market trend ever since. So please keep in mind, on a daily, this is hardly a trend. However, you step back and we get a pullback to 2200, 2150. I wouldn't mind buying some IWM. If the Russell futures get down to that level, you can pull the IWM up and you can see the nice longer term time horizon as well trend. So when there's going to be a major, volatility event, sometimes the easiest thing to do is lengthen the time frame. And that way it's as if, how many of you have taken a truck or a Jeep off-road? You know that you can't have the travel in your suspension that you have on the pavement, right? You need a lot more travel. Why? Because you're going to deal with a lot more chaos on the ground underneath you. Think about that. Think about your risk tolerance and your time frame sometimes as the suspension. So if you're going off-road, meaning we're going to see a lot of volatility, sometimes we got to think about, well, am I ready for the kind of travel, quite literally, that the price action can take? So thank you for the reminder to everybody, and thanks for that comment. GE. So if we're talking about any kind of split, reverse or otherwise, it's usually pretty much baked into the cake. I haven't been in GE, but again, let's take a look at the current market. It's choppy. So really, there's two ways I'm going to deal with at least the remainder of June and possibly the remainder of summer. And that is focus on the double green. GE is not. It's not even, look, it's been in consolidation before. See that yellow? That's actually really, that's really a possibly amazing momentum environment, right? We say possibly because the market can move sideways for a really long time, but the compression in the market does suggest we're going to see that expansion. And the yellow environment with the blue grab candles, that's a perfect confirmation. So then we look at the yellow we're seeing now, but it's devoid really of that same kind of sideways, flat wave, blue grab candle environment. So these two yellow environments are two different kinds. This is accumulation. This is distribution. So when I have a distribution market, it is an overbought, oversold environment versus a momentum breakout environment. But really what I'm spending most of my time doing right now is either focusing on short-term time frames, first 2 hours a day, and then I'm out, or I'm going to think about where are the double green markets still. And if I am starting at yellow, I'm already starting with a weaker watch list. So exhaust all the double green trends you can. Once you said, okay, I've gone through all the double greens, and then the next tier would be what did have a double green and has gone into a yellow market. But that's the sort of the second tier or the second pass through the market. Don't let your first pass through the market building your watch list be this structure. Not that it's not useful, but it's not going to be as good as double green uptrends that remained intact after last week's. So I might look at a number of healthcare names. I might look at a number of energy names. Right? There are, I would say though, that pool of double green that we had before Wednesday has been receding. So we've got to be even more discerning about our watch list, which I have to say, sadly, it has shrunk quite a bit. And that's why I'm pretty content for now, being very, very short term until the market sort itself out, kind of get their sea legs. Okay, PH 19 Golf, loving the new Darvis. Fantastic. I'm so pleased. That's excellent. Yeah, I am too. I'm really liking the clarity of it. It's on a standalone tool. That's something I want to reiterate. I would not say just jump out there and go with Darvis. In fact, I would never say any one tool should be standalone. But if you can start stacking your indicators, if you can have multiple whys, if you can have multiple reasons why a specific level on the chart is a reaction level, that's going to be the most valuable thing. And we'll be talking a lot more about that in the class on Saturday. In fact, there are two really good updates at the Countdown Trader for those of you that are sorting out, is this class for me? What is going to be covered? What's your approach, Raghee? If you head on over to countdowntrader.com, free website, take a look at the last two updates. I really love these two updates. Trish really distilled some of the major points that I would love for you guys to understand and know, for day trading. And you can check out the last two updates for that, even the last three, because what you are going to learn is a 4-factor approach to day trading futures, to day trading the options on ETFs and stocks. And quite frankly, if you want to, as I mentioned here, trade or buy the underlying stock or ETF, all that's going to gel in that regard. Okay, so just like that, it's 20 after. I'm going to go run on over to the options room and the futures room. I'll be with you all in both those rooms for the first hour of the day. So I'll see you all there shortly. In the meanwhile, everyone have a great morning. Heads up for 2 p.m. Kapow. In the meanwhile, be good to each other. I'll talk with you soon.